you for joining us this morning. My name is Diane Sturgeon. I am Deputy District Director of the U.S. Small Business Administration's office here in Maine, the Maine District Office, as well as Acting District Director right now. Our former District Director, Amy Bassett, who many of you may have heard from during the beginning of Triple P or throughout the years, has gone to New Hampshire as their District Director. So we're currently working on filling her role. I appreciate you all joining us, and I really want to thank Hospitality Maine for setting this webinar up and handling it for us. Hopefully I'll be able to answer a few of your questions. I have been muting people as you've been coming in, but if you are off mute, if you can go ahead and just mute yourself so that we don't get any background noise, I'd really appreciate that. And I'll just kick it off here. We've had a lot of updates with the Economic Aid Act, and then we had another round of updates, and we're currently waiting for even more updates with the legislation that was just passed earlier this week, and we expect to be signed into law on Friday. At this point, we don't have any specific information about that beyond what you've all seen in the news. Everybody always thinks we have, insider information, but we can't comment on legislation until it's actually been signed into law and the rules have been written. One of the biggest things I learned when I joined the federal government from private industry was that what seems like common sense isn't always how things roll out, and what seems like it's very obvious isn't necessarily how it'll roll out. So we always have to wait and see what the rules will be. So I know the Restaurant Revitalization Fund is a huge question for everyone. We're all really waiting anxiously to see how that will play out. I was on a webinar yesterday, or on a conference call yesterday, about the Shuttered Venues Operators Grant, which we're still waiting for applications to open up on. And that subject did come up, and we were told we're not even sure if SBA will be the ones handling that program, or if our Office of Disaster will be handling it like they have with Shuttered Venue Operators Grants. For anyone who isn't familiar with SBA, we don't actually do any direct funding of loans other than through our disaster program. So that's why they've taken on the grant aspect of the Shuttered Venue Operators Grant program. And I'm hoping that they will handle the RRF, or Restaurant Revitalization Fund, because I think there have been a lot of lessons learned as they've set up SVOG that may be helpful for that program. But we'll just have to wait and see after Friday, which is what we've heard is when the law will be signed by the president, and then rules will be written. Let's see. Just as of right now, these are the programs we have available there. I like this slide just because it gives you a little bit of a breakout. We've got both loan programs and grant programs running right now, and then a little bit of overlap between loan and grant. The Paycheck Protection Program is funny. It's really set up to be a grant, and it's kind of a grant masquerading as a loan, because ideally, our goal, the lender's goals, and Congress's goal was for anyone who took a Paycheck Protection Program loan to be fully forgiven and for that loan to be paid off. But if the funds aren't used the way they're supposed to, there is a mechanism there for it to convert to a loan. SBA has also instituted some debt relief plans. So for people who had existing SBA 7A loans, 504 loans, or SBA micro loans through one of our micro lending partners, they have seen some payments being made for them. So that's also been out there to help. And then there's the Economic Injury Disaster Loan Program and our Targeted EIDL Advance Program. EIDL is a loan itself. It's processed through our disaster loan program, and that's actually an existing program that's been modified a bit just to be able to service borrowers through the COVID-19 disaster. And then the EIDL Advance was a new thing. That was put in place by Congress back in the spring to give businesses up to $10,000 immediately as they were waiting for their loan to be processed, because the EIDL loan application process is taking some time. Last number I heard was about 50 million applications had come in through that program. So obviously it takes a while to get through those. With the Economic Aid Act, Congress refunded the EIDL Advance program to go back and actually target some specific groups. And everything you see with the Economic Aid program seems to really be targeting the smaller businesses, as well as businesses that are in low income communities, or those that are more hard hit by the disaster. So with the EIDL Advance program, what happened is they're sending out invitations. That's one of us, the don't call us, we'll call you type of things. So if you received an EIDL Advance during the first round, prior to us running out of funding on July, I think it was July 7th of 2020, you will get an email from the Office of Disaster through that portal. It'll come from an @sba.gov email address, and it will offer you the opportunity to apply for a targeted EIDL Advance. You still have to go through an application process because those advances are set up for businesses that did not receive the full $10,000 the first time. We ended up giving $1,000 per employee. So if you didn't get the full $10,000 the first time, you may qualify to get up to the remainder to get you up to $10,000. It's for businesses in low income communities, and that's based on an IRS definition. There is a mapping tool out on our website that you can check and see if you fall in that one of those communities, and also for businesses that can show, I think it's a 30% reduction in gross revenue. There's a lot of guidance out there on that on the website, on the Office of Disasters website, so you can decide whether or not you want to go through the process of applying for that targeted advance. They're sending those invites out in chunks and tranches. So the first ones went out to businesses that received funding but didn't receive the full 10,000. I think those invites have all gone out, or have pretty much all gone out. There may be a few stragglers left. Then they're starting to send invites out to businesses that got an EIDL loan after that we ran out of funding for that program, which I think was on July 7th through December 27th when the Economic Aid Act went into effect. And that will invite that group of people who did not get any EIDL Advance funding initially to apply for an EIDL Advance if they meet the program parameters. And then if there's any funding left over after that, they will go ahead and send invites out to people who have applied for an EIDL loan since December 27th of 2020 to present day. I believe the new act may have had some money in for EIDL advances, but I'm not sure. Again, there were like 50 million applications out there for the EIDL program. So the expectation is we will get through the people who received some funding, and those who didn't receive funding in 2020, we're not sure if we'll have any money to kind of get that program up and running again. But keep an eye out if you may fall into one of those categories. You can still apply for EIDL loans as well, and I think I'll talk about that a bit later. And then we have the Shuttered Venue Operators Grant Program, which we're still waiting for that application program to open up, and that's a very specific program that I don't think most of you would qualify for because it's for entertainment venues. But if you do qualify for that program, you definitely want to get out on to SBA's website to take a look. Now to the meat, we're talking about Paycheck Protection Program. Our top takeaways to the changes to that program were we expanded the eligible use of funds, how you can use the loan and still have it forgiven. We can now have borrowers select between 8 weeks and 24 weeks for their covered period, whereas before it was you could take 8 weeks or you could take 24 weeks as your covered period. So the difference between an or and an and there is huge. The minimum covered period is 8 weeks, and that's 8 weeks from your date of disbursement, but then you could use 10, 12, 14, whatever works for your business, up to 24 weeks from the date of disbursement of your loan. Another huge change, we offered second draws on the PPP loans for specific businesses that were more hard hit and that were are smaller, have 300 or fewer employees. We allow for deductions of expenses covered with the PPP loan through your federal taxes. I think that was the intention of Congress all along, but because it wasn't spelled out, what happened was when we said, okay, PPP money will not be taxed as revenue for you, the IRS came in and said, that's fine, but you can't double dip and take the expenses as a deduction. Congress came back and said, nope, our plan is for people not to have to be taxed on the PPP money that they receive and not to have to pay, and to be able to deduct the expenses paid with PPP money. So that's a huge benefit. Still waiting to hear how the state will handle that. I know what I just saw on a news clip this morning said the Senate at the state level had passed a law to say mirror what the federal government is doing. Still has to get through the House in Maine, and so we'll wait and see on that. We also updated, or were tasked with updating, a simplified forgiveness form for all PPP loans up to $150,000, and that covers 86% of all loans in the country, and it really covers the vast majority in Maine. So we'll see a lot of people able to take advantage of this one-page forgiveness application where you were certifying to all of the things that you needed to do. You know, you used the funds correctly, you were eligible for the loan funds, and you should be forgiven 100%. And you don't have to submit supporting documentation to your lender unless you are asked to by the SBA or by somebody, Office of Inspector General, or somebody else who is auditing that file. It's important to know that you need to retain those documents, and I think it says to retain the documents for 4 years on your application. I know I've heard of some businesses who are like, it's a numbers game, I'm going to take my chances, I'm going to say I qualify for 100% forgiveness even though I don't. You can do that, but I will tell you that loans are being pulled at a random sampling, and any loan can be pulled at any time up to that full 4-year mark to be reviewed. So you want to just have your documentation there. Again, our goal is to have all of these loans forgiven. I think the last calculation I heard was more than 99% have been fully forgiven, and a lot of those that aren't fully forgiven are because businesses chose not to apply for full forgiveness because they knew they didn't use the funds appropriately. It's not so much us finding that they didn't use the funds appropriately, but still, make sure you have your documentation there. And another shocker to a lot of us when people started applying for forgiveness was that the PPP, the idle advance, was being deducted from the amount of their forgiveness. Congress took that one liner out of the interim final rule that was causing that to happen out with the Economic Aid Act, so everybody got refunded for their idle advance that may have been withheld from their forgiveness. If you're a business that applied for forgiveness, had an idle advance withheld from your forgiveness amount, follow up with your lender. They should have been paid already for that portion of the loan, and if you had paid the loan off, they should have refunded the funds to you plus interest, or they should have paid down your PPP loan if you hadn't already received those funds. So that was a huge change and very welcome. Just to make sure everybody's aware, and because this program has been consuming my life for the last year, pretty much, close to, I always think, oh, everybody knows what it is, but I've run into people who don't. The program is a forgivable loan program. That's our goal, like I said. It initially started last April, I think on April 6th, and ran through August 8th was our final application date. So after August 9th, no one was able to get a PPP loan until the Economic Aid Act passed. And what the Economic Aid Act did was it took the program and it modified it a bit and reopened it for those first draw and second draw loans. It now said that we can make PPP loans to some additional entities. We expanded the covered eligible expenses, did the 8 and 24-week disbursement period. There were certain people or certain businesses that could request an increase to their original PPP loan, the legacy loans as we call them, from prior to August 8th. That was very limited. That increase option was not available because you had made a math mistake on your application, or you didn't take as much, you felt like you could have applied for more and you didn't. It was for people who had refunded money that they had already been approved for, or some specific business types. So very limited who could take advantage of that, but it was a benefit. And our rule is always, you have to have been in business by February 15th, 2020. I had a conversation with a business yesterday who said, what is this February 15th date? That's the date as far as the government was concerned that the COVID disaster started for this particular program. What you'll find is that we use different dates for each of our programs. I think for disaster idle loans, it's the end of January. For SVOG, I think it's February 20th or maybe the 29th. But for this program, it's February 15th. You had to have been in operation. Doesn't mean that you have to have been getting money. You could be a seasonal business who was not physically operating at that time, but you had been in operation prior to February 15th, and we're going to continue to operate after February 15th when your season started again. So that's just, you couldn't have been a startup that had never been in business and you started in August or some other date after February 15th of 2020. The program runs through March 31st of 2020 or until congressional appropriations are exhausted. At this point, I don't think funds are going to run out. We have used $165 billion of, I think it was $284 billion originally allocated to the program. as of Sunday, as of 3/7. In Maine, we've had more than 10,000 PPP loans approved in this round. We had 28,000 before, and we've used about $692 million in Maine so far. I believe there is some additional funding for PPP in the law that was just passed that we're waiting for the president's signature on. But what it did not do is extend that deadline. So at this point, we're still working with a March 31st deadline. I know there's been a lot of talk about that. I know that bankers associations and various associations have been reaching out to members of Congress to ask them to extend that deadline. But at this point, that is the deadline we're working with. And that deadline is the deadline for having your loan number issued by the SBA. One of the changes that did occur with the second round, where the first round, the bank or the credit union, whoever your lender was, would just put the information into our system and we would immediately issue a loan number. Because of some feedback we got from the Office of Inspector General, from Congress, from the world at large, who was giving us feedback on people they knew who had gotten PPP loans that they didn't feel qualified, we put some safeguards in place, and that changed how the system works. There's an origination system, and the origination system also had to be created to deal with the second draw loans, but there's an origination system where the lenders put the information into a portal. That portal does some checks. It goes out to some databases like LexisNexis, Treasury Do Not Pay, and whatnot, and make sure you are who you are. It also bounces against our system to make sure that the Social Security number and the tax ID number, the EIN for the business, are all accurate and match what was previously put into our system. And then it issues a number. So it can take 24, 48 hours for a number to be listed, or if there's a compliance error code, a bit longer for your lender to clear that code or to ask SBA to clear that code. So I recommend people don't wait until the last minute. I know a lot of our seasonal businesses are trying to hold off on applying because you want to stretch your covered period. Completely understand that, and it is a recognized issue that seasonal businesses do kind of get dinged a bit here, because if your covered period starts on your date of disbursement, your lender must disperse within 10 days of receiving a loan number from us. That only takes you through about mid-July if you wait until the very end. So we understand that and totally get that, but you don't want to wait until the last minute to apply, because your lender has to have time to process your application, do their due diligence, get it uploaded into our system. Our system has to have time to go through its checks. So I'm recommending people give themselves at least a week. I've also heard that there are some lenders who are going to stop taking applications at a certain point to make sure that they can get through their queue. Nobody wants anybody left out there sitting in a queue and having their application not processed. So talk to your lender in advance, maybe get all your paperwork in place with them, have everything ready to go, and then they can submit it as it gets closer to March 31st for you. The changes, the new eligible organizations are housing cooperatives, destination marketing organizations, certain 501c6 organizations like our chambers of commerce, and eligible news organizations. There was an affiliation issue for a lot of the news organizations like NBC affiliates and whatnot, so they've taken away that affiliation rule. People that are still eligible are sole props, independent contractors, self-employed individuals. I always like to make sure people know independent contractors and people who file a Schedule C are still eligible, and I've added some information towards the end of this presentation to talk about Schedule C businesses, because that application process changed a little bit, much for the better for the Schedule Cs. But they are eligible for PPPs. There was stuff in the news right up until the bitter end where they were saying they weren't, that you are. Business entities, so partnerships, corporations, LLCs, 501c3s, which is a big change for our programs. Normally, SBA loan guarantees and loan programs cannot be used by nonprofits, other than some very limited instances for childcare industry. But with PPP, they can, as long as they meet the size standards that we set. 501c19 veteran organizations, again, not normally eligible, but eligible for PPP, and tribal businesses are still eligible. Whoops. The second draw loan is for those people who received a first draw loan in the first round and have 300 or fewer employees and also suffered a 25% reduction in gross revenues. There are a couple of different ways you can calculate that gross revenue reduction. It can be straight up full year 2019 compared to full year 2020, or it can be first quarter compared to first quarter, 2019, 2020, same quarter, different year, 2019 to 2020 comparison, assuming you were open for full 2019 or in business for full 2019. If you were a startup in 2019, so didn't have a full year, there are some variations to how you calculate that, and we have some great reference documents out on our website at sba.gov/PPP that tell you how to do that comparison. So, and we can also talk you through it here at the district office, or our resource partners can help you. But ultimately, it's 25% gross revenue reductions. That is that gross revenue number, which is a bit of a stickler for some people, because some organizations, although their gross revenue was up, they had much higher expenses. So, but I'm afraid that's the number that we have to deal with based on the legislation. The other thing is, the only things that are excluded from your gross revenue number as far as this legislation was concerned is your idle loan, idle advance. Idle loan, obviously, because it's a loan, would be included, but your idle advance, even if it was because it was a grant or an advance, is not included in that gross revenue number, and your PPP loan is not included in that gross revenue number, even if it was forgiven. So you don't have to include those. But if you got one of the state's grants that was funded with CARES Act money, if that money is taxable, it has to be included in your gross revenue. So that's where you get around to picking out which quarter you want to compare. You may not want to use year over year because that grant brought you up to where you're not showing the 25% reduction. But hopefully, if you use one of your first, second, or third quarter, because most people got those grants in the fourth quarter, to compare same quarter to same quarter, you'll be able to show the revenue reduction. Second draw loans for most borrowers is 2.5 average monthly payroll costs up to $2 million. So first draw is up to 10 million. Second draw is only up to 2 million. So there's a little bit of a difference, and that's one of the reasons the funding has been going a little slower. But for a lot of you, people in the accommodation food service sector, with a NAICS of 72, and that's the NAICS you've reported on your tax returns. We've had some convenience stores who say, hey, we sell a lot of sandwiches and pizza, we should get to use the NAICS of 72. We've had to say, nope, historically, and what your business truly is reported to the IRS on your tax return. Does not have a NAICS of 72, so you can't take advantage of this benefit. But any business who had a NAICS that began with a 72 on their tax returns can use 3.5 times average monthly payroll. Your covered period does not change. The maximum of 2 million doesn't change. So you still have 8 to 24 weeks to use it, but you get 3.5 times monthly payroll. So that's a huge benefit. And the applications for the second draw will all have SD after them. So you'll see SD after it on the borrower application form, the lender application form, and potentially on the forgiveness form. I'm not positive about that. So just check the forms when you're filling them out. I will say the forms have very good instructions on them. So if you're trying to fill out the form and you're like, what are they asking for in this field? Like the total employees. Total number of employees is a head count. It's not an FTE calculation on your application for a loan. So if you have 400 total employees, but when you do an FTE calculation, it comes down to 150, you're still going to be over that 300 employee mark. So just remember, that's a head count. Seasonal, it doesn't matter, seasonal, part-time, full-time, whatever they are. If you give them a W-2, they're an employee. So take a look at the instructions on the application for that, for calculating average monthly income, our payroll, and all of those things. They're really very helpful. The other thing with with the second draw PPP loan, obviously you have to have a first draw PPP loan to get a second draw loan. We've had some restaurants and people in the accommodation industry who are like, hey, I just want to jump to second draw. Doesn't work that way. You have to use the first draw first. And your 2 covered periods cannot overlap. So this has been a little bit of a stickler for some people, because you're not allowed to push your disbursement more than 10 days from the date that you get your loan number from SBA, and you've got to use at least 8 weeks. So the period was about mid-February where people could have gotten a new first draw and still qualified for a second draw. Everybody who has a legacy loan, your covered period ended on December 31st, regardless of when you got the loan. So you're covered there. You have to be able to certify that you have used or will have used the full first draw PPP loan amount only for eligible expenses before the second draw loan is dispersed. So you don't have to have gotten forgiveness, and you don't have to have applied for forgiveness, and you don't even have to be 100% forgiven. as long as you can say, during my covered period, that 8 to 24 week period, I use those loan funds only for eligible expenses. What we found is that some people couldn't hit that 60% number on payroll. A lot of their employees didn't want to come back. They didn't want to be paid because they were getting the unemployment kicker that was in there, and they were making more money on unemployment. Understand it. It's frustrating that the federal programs were competing that way, but we can understand it. So maybe you didn't hit 60%. You had a $100,000 loan and you only hit 50% of payroll. What that would mean is you would only qualify for a maximum of $90,000 in forgiveness. You'd have $10,000 left over there. What you'd have to say is you used the 50% for payroll and the other 50% was used for eligible expenses, even though it wasn't completely forgiven. So don't get hung up on forgiveness, forgivable and not forgivable. It's all about eligible use of proceeds. You can't have more than 300 employees, so 300 or less employees, and you have to show that 25% reduction in gross receipts between 2019 and 2020. And this says comparable quarters, but it can be full year if that's easier for you and you can show it. The process for applying, you don't come to the SBA, and I do like to make sure people understand government websites always say .gov at the end. There is a website out there called SBA.com. That is an SBA lender. I think Lendio might be using it, or one of the other online lenders. So don't think you're applying with the SBA when you go to SBA.com. That is not the SBA. SBA is SBA.gov. So just know that, please. You can go to your lender that you have a relationship with. I always recommend people do that. Just because you have a relationship, they're hopefully local, somebody local you can talk to who can help you out and help you out through the process. You don't have to go to them though. You don't have to go to the same lender you got your first draw loan from. A different lender can do your second draw loan if you want them to. If you don't have a lender, you don't know who to go to, we have the equivalent of Match.com for borrowers and lenders. It's called Lender Match. You just go to sba.gov/lender match or hit the Lender Match icon on our website. Fill out what you're looking for. I looked at it the other day. It's like a little one-page document, and we'll match you up. We'll go out to a lender if it's operating in your market and say, hey, this person wants a PPP loan, and they'll contact you and you can do your application there. Our resource partners, which I'll talk about a little bit at the end, SCORE, SBDC, Women's Business Center, and our VBOC, are incredible in this state, and they're also willing to help you as you go through the application process. You fill out the application, including all your supporting documents, get it to the lender. Lender does their due diligence, puts it in our system, and boom, they get a loan number back, hopefully, straight away from us. That deadline, as I said, is March 31st or when appropriated funds are exhausted. So just keep an eye on that. And that March 31st deadline is for us at SBA to issue the loan number. And like I said, it can take time for that. So don't wait till the last minute. If by some, circumstance, your PPP loan is not fully forgiven, all loans have a maturity of 5 years now. Some that were done in the beginning may have had a loan maturity of 2 years. If you need that extended, you can talk to your lender and they can go up to the full 5 years. The lender cannot make a maturity of greater than 5 years on these loans. And that 5 years is from date of disbursement. So it includes your covered period, it includes the deferred period, because you don't have to make payments on this until we have issued forgiveness, as long as you apply for forgiveness within 10 months of the end of your covered period. All of that time is included in that 5-year period. So just keep it in mind if you think you're going to have a loan left over at the end. There's no collateral, there's no personal guarantees, there's no fees, there's no prepayment penalty. 5 years from the date of disbursement, like I said, and once you get your forgiveness decision, that's when you start making payments, and you'll make payments to your lending institution, and they'll work with you on that because they are the conduit for information back and forth from SBA to you. Our relationship is really with the lenders. It's not so much with you. So you'll give stuff to your lender will give it to us. We need information, we're going to go to your lender, they may come to you, that sort of thing. So they're the person you want to talk to. That's why, and I'll admit it, I'm biased. I worked for community bank. I like community banks because they're local and they'll work with you directly, hopefully. As I said, forgiveness does not have to be applied for. And it actually does not have to be applied for until the end of your covered period. But if you wait that long, you're going to have to start making payments on the full balance. So not your covered period, I'm sorry, until the end of the term of your loan. But what you really have is your payments are deferred for your full covered period plus 10 months, plus the time it takes your lender to make their decision on forgiveness, plus the time it takes SBA to get back to you with a final forgiveness decision. So you've got plenty of time there. Don't rush into anything. Take time to get your documents pulled together. And also, you want to just keep an eye out there if there are any changes that are coming through, because once a loan is forgiven, it's forgiven. We have not seen any ability to be able to go back and modify anything that's already been forgiven. So this isn't a program you necessarily want to rush through the forgiveness portion. I know people are in a bit of a rush now because taxes are due, but hopefully that won't impact too many people. For forgiveness, you have to apply for the forgiveness through your lender. Like I said, they're going to come to us with that decision. If we disagree with the lender, or if you disagree with the lender can submit it saying, hey, we don't think this qualifies for full forgiveness. The borrower does. Please, SBA, take a look at this. We have the ability, we may or may not take a look at it. If we just straight up agree with the lender based on what we have, we'll go forward, but we may review it at that point. We may ask for additional documentation at that point. If you don't agree with SBA's decision, once you get that final decision from SBA, you will get something in writing from your lender that says, here's the final decision, hopefully. And like I said, more than 99% of the time at this point, it says, we've paid your loan off in full. You're good to go. Have a nice day. Best of luck. If it doesn't say that and it says, okay, we couldn't fully forgive your loan, there are some steps you can take there if you still don't agree. If you qualify, if it was based on eligibility or some other reason that we were unable to forgive your loan, to go through the Office of Hearings and Appeals, but you have to have your full final decision from SBA before you can go that route. Office of Hearing and Appeals is totally separate from our forgiveness team. It's actually lawyers and judges who handle that sort of thing, and so that's a very formal process. So just keep it in mind. It is in your back pocket if there is a special circumstance where you feel you did qualify, but the bank and SBA didn't agree with you. Other updates, like I said, idle advances are no longer being deducted. Expenses paid with PPP loans can be deducted on the federal side, waiting to hear on the state side. The expanded forgivable expenses, a lot of you may have run into these, and especially in the restaurant industry. PPE costs, modifications made to your business. Did you put in a drive-through window that you didn't normally have, or a walk-up window? I know there's a restaurant I go to in Belfast where they put in a walk-up window at one point so people could walk up rather than having to walk in. The plexiglass shields everybody had to put up everywhere, or those bubbles that people put out for restaurants, that sort of thing. Expanded outdoor seating areas if you didn't previously have that. Those are now eligible expenses, but you have to remember you always had to use at least 60% towards payroll. So take a close look at that as you calculate your forgiveness. And I always say go for the low-hanging fruit first. Payroll straight up is forgivable for employees. There are some limits around owner employees, so keep a close eye on those. But if you can hit 100% with payroll, do it. It's easier. You don't have to deal with any of the other calculations. And we have that new simplified form for those with a loan amount of $150,000 or less. And per the CARES Act, we always said PPP forgiveness is not taxable. The big change that just happened at the end of February was a change for Schedule C filers. I don't think we'll probably have too many of those on this call, but I did want to touch on them quickly. Sole props, 1099 wage earners, self-employed individuals, all of those, all of those people that file in a Schedule C for their business can now use line 7 instead of line 31 to calculate their loan amount. This does not include partners who file a Schedule C, because your partnership files, I think it's a 1065, scary, these numbers are sticking in my head, but you file a 1065, and as a partner, you claim your payroll through your K-1 distributions. That can be included in your payroll calculation on your partnership return, and the partnership return captures all of the other expenses that are included and eligible in PPP. So that's why you have to do, it's partnerships have to file on a partnership return. They can't, as individual partners, file for Schedule C. So just keep that in mind. I had one accountant that I had to have a pretty direct and detailed conversation with about that, because the rule is you can get one first draw and one second draw. So if the partnership doesn't qualify for a second draw, the partners can't individually come back and apply for another first draw. They've already used up that golden ticket through the partnership. There's also some language about the forgiveness on Schedule C borrowers, when they, as far as a good faith loan certification, as far as your need for the loan, the vast majority of our borrowers had loans of $150,000 or less. Most of our Schedule Cs, $150,000 or less, but there's some language there, so just take a close look at that. There is a safe harbor for anyone, any Schedule C who applies that makes $150,000 or less, as far as not having their forgiveness, that necessity questionnaire answered. If a Schedule C has income of greater than 150,000 and they use that as their loan to calculate their loan amount, they may have to file a necessity questionnaire. It's just something stating that they truly needed the loan. And for second draw, the safe harbor has already been answered, because you're going to have to show that 25% equity reduction. Some eliminated restrictions, and this has been huge because we've had some people held up. Most of these are not retroactive though. So if you have a hold code due to being on Treasury's do not pay list for your forgiveness, you need to be aware that this change does not impact that unless it's student loan debt. So, but the big change is we've removed restrictions that were in place for non-financial fraud felony convictions. Previously, if somebody had a fraud conviction within 5 years of the date of application, they were not eligible to apply for a PPP loan. That has been changed, and now it's only financial fraud felonies, so much more limited group there. There is still a restriction in place if a 20% or greater owner is currently incarcerated for a felony at the time of application, so, or had a felony fraud conviction in the past 5 years for a financial fraud felony. Student loan debt had come back on a lot of people. They had student loans that were either defaulted on or were delinquent, and that was keeping them from being eligible. That has been removed as an elimination, or has been eliminated as a restriction, and that one is retroactive. So if you weren't being fully forgiven because you were on Treasury's do not pay because you had defaulted on student loans, we're going back and removing those hold codes. So that's a good thing. And non-citizen owners have always been eligible, but the system is looking for the equivalent of a social security number for the principals of the business. As a non-citizen owner, they may not have a social. If they don't have a social, they need an ITIN, or an individual taxpayer identification number. And those do expire, and they have to be issued by IRS. We can't issue those for people. So they'd have to go through the IRS to get that. Programs and services, I always like to make sure everybody is aware of. In this state, we are so lucky. We have tremendous resource partners, and we're really lucky. In Maine, for the most part, you know, we're physically large, but we're a small community where everybody seems to work together. Everybody seems to get that rising tide lifts all boats in this state. So we have Maine Small Business Development Center, Women's Business Center, SCORE, and the Veterans Business Outreach Center. The VBOC is located in Rhode Island, but they do have a representative who sits here in Maine, and some partners that they work with in Maine. So we have representation here. That's specifically for veteran-owned businesses. Then SCORE is a volunteer-run organization. Women's Business Center, it says women's in their name. They are primarily for women-owned businesses, but they do service all businesses. And Small Business Development Center. They're scattered all over the state right now. Most of them, all of them, are doing remote and virtual counseling, so take advantage of them. You've paid for their services with your tax dollars already, so you should take advantage of the free business counseling services or business mentoring that they do, as well as they do trainings. They have online systems. SBDC has got some online training classes you can take that have been that they have enhanced recently. Check those out. WBC as well. SBA has an online training module, has online training modules as well. So get out there and take advantage of those. SBA always has our access to capital programs beyond PPP. Just sadly, a lot of people weren't aware of it. I always say, if you can get a loan without us, get a loan without us. But if you need us, we're there to guarantee the loan if your lender wouldn't otherwise make it. And we also fund SBA micro partners. We have 5 of them in this state, and they're great. They are CEI, AvCog, Community Concepts Financial, Mainstream, and Northern Maine Development. They can make loans up to $50,000. There have been some enhancements to that program recently too. So if you're not able to get a bank loan, you go to an SBA micro lender as long as your loan is less than $50,000, and they should be able to help you out, hopefully. They also offer technical assistance, which is an added benefit. We help facilitate contracting with the federal government, which is buying and selling goods and services to the federal government. And of course, our disaster loan program, everybody knows a lot more about than they used to. Information about all of these programs are available on our website, sba.gov. You can go to the Maine District Office website, which is sba.gov/ME. And we have a local assistance website, sba.gov/local assistance, where you put in your zip code, say who you're looking for, and we'll tell you the place closest to you to reach out. We also have newsletters. So SBA has national newsletters targeted towards exporters, newsletters targeted towards contractors. So you can just go to sba.gov and hit /updates and sign up for any of those newsletters. You can also sign up for our local newsletter, which I strongly recommend everybody does, because when program changes happen, we blast it out through that Gov delivery system to our list, our distribution list, immediately. We also put out information about local trainings and outreach activities that are happening. So it's great to sign up for that. You can unsubscribe at any time if we get to be a little overwhelming, but hopefully that won't happen and you'll subscribe to that. Again, sba.gov/updates, or if you go to sba.gov/ME, down towards the bottom of the page, there's a button that says Get Email Updates. You can click that and sign up there. We are on Twitter at sba.gov is the national Twitter. At SBA Maine is our local Twitter. Our district office email box and phone numbers. If you have questions, I ask you to email main_do@sba.gov. We are all handling that email box, so that way we can make sure the best person to answer your question can get back to you. So definitely use that. Phone numbers 207-622-8551. And then we have the national website, which is just, like I said, sba.gov/coronavirus relief will get you all of the programs, /PPP will get you into the PPP program, and SBO grant will get you information about the Shuttered Venue Operators Grant Program. And I expect we'll see something out there soon about the Restaurant Revitalization Fund, if we're the agency that is tasked with handling that program. So I went a little longer than I wanted to, but I still got about a little over 15 minutes, I think, to answer questions. Kathleen, I think it looks like we've had some come in the chat. If you want to let me know, or
yes,
if you want to handle them.
Yes, we do have a question in here from Bruce Woodward, who asks, if 2020 PPP proceeds have not yet been forgiven by 12/31/20, how should the PPP proceeds and their paid expenses be reported on 2020 tax filings?
So on the federal side, it's easy. The PPP program doesn't impact your federal taxes at all, and you can deduct the expenses. I'm afraid we're still waiting to see how the state is going to handle them. So you're going to have to talk to Maine Revenue Service or your accounting professional on that. But federally, we have said PPP loans, if it's still on your balance sheet as a loan, it would not impact your taxes for us federally. If it was forgiven, in theory, normally a settled loan or a forgiven loan, you have to file as including your gross revenue. But federally, we have said you do not with PPP, and you can fully deduct all your expenses. So keep an eye out on what's going on with the state, though. Hopefully we'll hear something soon.
And when we do,
Yeah.
This is Greg. When we do hear, we will let everybody know. So hopefully the House will vote today. And I mean, the Senate did vote to pass it. It will be more difficult in the House because they were going to need more people from the Republican Party to help them get it through. But my sense is it will happen at some point. It may be in the wee hours of the morning, though, as usual.
Yes. We have another question. Scott Calgar of Maple Hill B&B. Does any aspect of the SBO grant apply to conference centers associated with lodging hotels? Yeah,
that's been a big question, especially for our wedding venues. SVOG is for performance venues primarily. So I have to be very careful because as a grant program at the district office level and as an SBA employee, we're not able to help you decide if you're eligible, help you decide whether or not to apply, help you with your application and share any information that's not publicly available. Because it's a grant program, all information has to go out at the same time. Our resource partners are going to be able to help fill out the applications and figure out eligibility for people. But my understanding, and the one I've run into the most that people have figured out is not that they're not eligible, are things like wedding venues and that sort of thing. And it's just the way the legislation was written. But take a close look on the website, sba.gov/SVO grant. Has some great videos out there for people to figure out if they're eligible, some great overview documents, and some sample documents, or a list of what documents will be necessary when the applications do open up. So take a close look there is what I would say.
Excellent. Well, Diane, thank you for this very helpful, in-depth overview of the Triple P. I know our members appreciate this.
Yeah, I do see one question that came through to me privately, so I'll throw that one out there. It's just, will they extend the coverage period to beyond 24 weeks from loan acceptance for seasonal businesses in the second round? We haven't heard anything about that. I know I heard Senator Collins speak yesterday during Eggs and Issues for the Portland Region Chamber of Commerce, and she mentioned the recognition that it is impacting our seasonal businesses. So we all understand, and we totally are there with you on that one, but we haven't seen anything to indicate any changes on that. And I haven't heard any whispers of it being included in the legislation that's being signed into law, hopefully tomorrow. Excellent. And that's something that Congress will have to guide, because they are the ones that have to. We had to go to Congress to get them to change that or to an and. So extension of the deadline from beyond March 31st is controlled by Congress, not us as an agency, and also the and or the or. There are also a lot of conversations. It's been very enlightening for me to understand how this all works, because I'm going to admit I am not a political person. I don't like to get involved in that stuff. But to understand how the agencies work with Congress, because we cannot lobby Congress or ask them to do certain things, but a lot of times we have to go to them and get an understanding of what their intent was behind a rule or behind a law change. So when we write the rules, it makes sense. So there's a lot of back and forth there going on, expressing concerns for sure. Let's see, were there any other questions? Oh, I see one. I don't want to answer it. Is there a reason forgiveness is delayed for some of our borrowers? There is. It's volume, I'll be honest with you. It's sheer volume. And it's the institution of the new the re-upping of first draws and the added second draws, because we have a limited staff, very limited staff. SBA is actually the smallest cabinet level agency in the country. So we have a very limited staff. So what happened was, when we started doing origination again, we had to take a whole bunch of people that were working on forgiveness and say, you guys in the service center need to come over here and start working on origination, because this is on a deadline. So we do have a goal for 90 days from the time we receive the application from your lender to say what your forgiveness should be. But we're not hitting that number on all of them, absolutely, for sure. You should work with your lender. Your lender can ask, but we can't get any specific information on specific borrowers' forgiveness applications either, because there are literally millions of them out there. So we're doing it as, what we get back from the center when we ask for it and ask them why they're held up is, we're dancing as fast as we can. We're trying to get through them. Trust us, we want to pay these loans. So, I apologize for those delays. I know it is frustrating for a lot of borrowers, especially as you're hitting tax time, but we're trying real hard. Kathleen, did you?
I just wanted to stick to on the issue with Senator Collins, and as far as it relates to seasonality, we spoke with her and her staff, and they wrote a letter on our behalf. That's the letter, I think the reference that Diane made. It was written to both the Treasury Department and the Small Business Administration to ask that they do some sort of rulemaking process to change the seasonal aspects of it. Honestly, Diane, I haven't heard anything since then, and we're running out of time. So I'm
Yeah.
hoping that something can still happen, but I'm not sure that it will. But just be aware that Senator Collins did lead the charge on that.
Yeah. Yeah, it's impacted a ton of our businesses here in Maine, and we all have really felt it and seen it. It's impacted you, and we did change and catch up in some in how you calculated your loan amount, but that's been a real stickler, I'm afraid. And it's been both years because they've all started this year. It even started later, so our summer season businesses were really kind of blocked there.
Just one quick clarification in here. So is the PP loan still a loan on 12/31/20? Because forgiveness might have been applied for, but not yet approved.
That one, you know what? I'm going to leave that up to your tax professional to answer that question. In my view, as a former banker, and just I may get in trouble here because I'm trying to apply common sense, and I was told very early on when I came to work for the federal government, stop using common sense. We don't use common sense. We use the standard operating procedures and the rules. So, but I believe it's still a loan because you don't know it's forgiven until it's forgiven. And I think that's what's held a lot of people up, because until we give your lender that check or that, that automatic funds transfer to pay your loan off, it's still in the books as a loan. And you have signed loan documents committing to repay it if it is not forgiven. So, but double check with your tax professional for sure.